Let the market tell you what the market is doing. That is what the Japanese rice traders constantly profess. And as we can see in the Dow, it levels off, it pulls back, and it starts back up again. This is the same thing that has done here and even at lower levels. The market is telling us that it's in a slow, steady uptrend. The Dow used the T-line today as support. Once an index or any trading entity comes up above the T-line, you have to consider that you're in an uptrend until you see a candlestick sell signal and a close back below the T-line. Having the ability to analyze all the indexes, we can see that the NASDAQ was doing the same bullish move where we had a morning star signal that bounced off the 50-day moving average, a left-right combo, and today they opened it lower, but even as they opened it lower, they immediately started trading it higher. So it was an indication right away that the bulls were still in this market. They were just opening the market a little bit lower today. Continue to stay long. This definitely looks like a J-hook pattern setting up, which means we could be heading for much higher territory. We recommended RGR today on a very simple premise that we had a rounding bottom, which is a very high probability trade setup. And notice the left-right combo. A left-right combo is a doji type day, and this is a big doji hammer day, followed by a bullish engulfing signal. That's usually that indecisive trading one day, followed by a decisive trading the next day, meaning there's still going to be a lot more upside. And a lot of the refineries had the same type of setups. We recommended WNR today based on if it opened higher, it was breaking out into new territory, confirming a J-hook pattern, which started with this downtrending channel, then a morning star signal with a bullish confirmation, hanging man signal with confirmation, and we were closed Friday right on the resistance level. Today, with it trading higher, told us this wasn't going to be a resistance level, and we know that they move in waves. So if this is wave 1, this is wave 2, wave 3 should be equivalent to this wave right here. This makes analysis of where a trend can move and when a trend will move very simple using candlestick signals. It is just common sense put into a graphic depiction, with the premise being that investor sentiment reacts the same way time after time, year after year, decade after decade, and in the case of candlestick analysis, century after century. That's why candlestick signals are so effective. That'll be it. We'll see you in the chat rooms.